Hey everyone, John Henry here, Slingshot Futures Trading Group. Thanks for joining me in today's video. Before we start, take a second to give the video a like, subscribe to the channel, and make sure to click the notification bell icon so you don't miss our next live stream or next video launch here on YouTube every day. Make sure you start your day off the right way. Don't forget your free morning brief that's waiting for you at ssftg.com/brief. In the top left, you can click on morning brief to jump into that. That's where you'll find all of our major DP levels right up here at the top, as well as a quick technical overview for the major 6 markets that we look at: the NASDAQ, the S&P, you've got gold, crude oil, the euro, as well as Bitcoin. Maybe you're looking to get a full game plan for the day, week, or month. Check out the join button below. Level 1 subs get a brand new members only video every single morning going over the major 6 markets and a game plan for the day. In addition to that, once a week I launch a weekly brief, and of course once a month we have our monthly brief as well. Of course, all members gain access to our private Discord chat server, and if you really want to get into the nitty-gritty, check out the live analysis room for level 2 subs, where you can see my screens in real time during the New York Stock Exchange Open. You can ask questions and interact with the other members, as well as bounce ideas off myself and everyone else. It's a fantastic environment, and I would love to see you in there. All right, and now on to the really fun stuff, the topic for today: how I use market patterns to better time entry location. So first off, when we're looking to get into the market or get out of the market, it's very simple. You just hit the buy or sell button and wham bam, you're in, right? There's not a whole lot of thinking that can go into it. But if we want to have probability on our side and we want to actually follow a trade plan that makes sense other than throwing darts at a board, we have to utilize a bit of market patterning to allow a better idea of what's going on. Generally speaking, market patterns are just a repetitious occurrence that happen over and over and over and over again in the markets, and that lead you to a certain accuracy that it's going to succeed in its repetition once again. Now, most of the time, these repetitions in the market are never going to be 100% accurate. And, well, actually, not most of the time, never, because the market is always in a mild state of chaos, and all it takes is a news event to throw it off. But these types of market patterns can allow us, again, a certain accountability that we can use as a backbone to structure a trade around. Now, for me, we have a BL3 pattern to the downside leading into an L1 sell zone. Obviously, in hindsight, this would have worked out perfectly, but I'm not a trader on a 15-minute chart. I'm not a big fan of trading the 15-minute chart. So this is creating a zone of interest that we can then zoom in and utilize on a faster time frame. So from this zone, if we highlight this area, we can come into a much faster time frame and analyze how this looks. Let's set that to all charts so we can see it everywhere. And then from there, we can drive down to something like a 1-minute chart on an aerial view to get a really good idea as to what happened inside of there. So with this movement to the downside, this is where we want to narrow in, right? We don't necessarily know initially where I want to be bearish, but once the market starts putting in a base here, it's giving us a market repetition that we can count on. There's a very high likelihood, at least 60% likelihood, that we'll find a rejection out of the L1 sell zone. So if we find a rejection out of the L1 sell zone in this case, I know that realistically my job is just to find a way in and try to find a way in that allows me to go for a 2-to-1. Because if I'm able to get a situation where I have a 2-to-1 in a 60% likelihood area, I've got everything working in my favor. Doesn't mean I'm going to be right, but at least I'm trying to stack the odds in my favor so that I've got a better chance of it rolling back over again. Now, there are a lot of other factors that we can utilize to find these sell zones, like divergences on the MACD or stochastic signals. But realistically, the timing comes down to waiting for price to get into the zone that's interesting, the hot spot. Then we can start making our decisions. Now, the last one was a 1-minute chart, and I know a lot of folks don't necessarily use a 1-minute chart for candle-by-candle price action. It's a bit quick for that. So zooming out to something a bit more ubiquitous, like a 5-minute chart, will help us out here. And just from a very basic understanding of price action, without having to go into any crazy details, the zone of interest is here. We've got a new swing low. The market pulls higher. We've got a first entry short, goes up to a new high, second entry short, and that's where the market gets absolutely obliterated. So even the very most simplistic ways of entering allows ways in to drive the market back down. And again, if you can stack it in a situation where your entry point is allowing a target, which is back down here at the very least, which is a 2-to-1, that's even better, because if you're able to enter here risking, maybe a little bit above that last bull pop, well, if a target is way down here, that's way farther. That's better than a 2-to-1. That's the perfect scenario that you want to find yourself in. You're stacking all of the odds in your favor. You're getting the timing down by narrowing into a faster time frame and looking for patterning on the faster time frame to give you the heads up that, hey, it's time to hit the gas pedal. Here's another great example on Bitcoin this time, where we have a 15-minute chart breaker L1, where the sellers just totally failed. They tried getting that slide down and tried and failed. And with this reversal higher, this is the big zone of interest. But again, on a 15-minute chart, that might not necessarily be that useful. So if we zoom into something a little bit faster, like a 5-minute chart or something that's a little bit more useful, we run into several different opportunities that come in down here, like traps on the lows, or second longs off the bottom, or second short failures rotating back up, or maybe you're a Fibonacci trader, you've got the fib pullbacks. There's a million different ways into these trades, but until you're able to pinpoint the correct location, whether you're using market patterns or channels or whatever, just anything, make sure that you're using something to time your entries, and then narrow down into those areas and look at what the faster price action is telling you. Is it respecting it? If it is, chances are you've probably got a pretty good location. And if it fails, it's going to fail on a lot of other people, and your stop is usually going to be relatively small compared to your potential reward. Whereas if there's just no response at all to it and nobody cares about it, then you save yourself a little bit of grief. Either way, very important to make sure you're doing some form of timing to ensure that your entries are as pinpoint precise as possible. But that's going to do it for this one. Like we always say, stay safe out there, keep those stops in play, and let those winners run. If you have any questions, send me an email, jhb@ssftg.com. If you have any questions, comments, anything like that you want me to make a video on or want me to respond to, drop those in the comments. I'm always taking a look at the comments and seeing what's going on there too. So outside of that, rest up, and we will see you all in the next one. Thanks.